Hello, and welcome to the forum. Every week, we take no more than 5 minutes to discuss 3 highest conviction ideas surfaced across the Smartkarma network, cutting through the noise and helping you zero in on what truly matters most. Without further ado, let's dive into this week's ideas. Good evening, ladies and gentlemen, and welcome to the Smartkarma Forum. The forum is a high-impact weekly live webinar exclusive for Smartkarma Plus subscribers, where we use the forum to discuss the best, highest conviction insights surfaced across the Smartkarma network. The forum is meant purely for informational purposes and does not constitute investment advice. It is the opinion not of Smartkarma but that of our insight providers, and Chatham House rule applies. At the end of every week, we take video recordings of the forum and convert them into short bite-sized pieces and upload them onto our YouTube channel to make it easy for you to revisit these ideas at your own time and pace. This also makes it easier for you to share these ideas with your friends and get their feedback. Every week, we try to bring you a range of ideas from large caps, small and mid caps, as well as core thematics. Today, we will begin by looking at Uchi technologies, then we will move on to Grab Holdings, and lastly, we will take a look at US banks. Let's begin with Uchi Technologies. The ticker is UCHIMK, and this is covered by Samir Taneja on the Smartkarma platform. Uchi Technologies is a manufacturer of controllers for coffee machines. They have a 23-year track record of operating margins of over 40% and ROCEs of over 20%, trading at 11.9 times trailing PE with a dividend yield of 9% and 15% of the market cap in cash. The company has been serially paying dividends, a payout of more than 70%. In its 2022 annual report, it announced exciting growth plans that will be revealed over the year. Next, we have Grab Holdings. The ticker is GRABIJ, and this is covered by Angus McIntosh on the Smartkarma platform. Grab Holdings develops delivery management, mobility, financial services, and enterprise software solutions. They announced a cut of 11% of its workforce, and it was a move to rationalize costs for longer-term growth. Near-term profit targets would be achieved without these recent cuts. Cuts are focused on addressing geographical cost imbalances and automation through generative AI. Growth this year is promising, with the potential for a strong second half recovery. Lastly, we take a look at US Bank Watch. This is an insight covered by Andreas Steno. Sticky core inflation, bounce in housing, and AI mayhem are all reasons for higher rates. Banks can't compete against the rates at money market funds, leading to slow withdrawal of deposits. Bank will have to sell their assets, which have suffered from unprecedented rate hikes. Senior loan officers survey approaches levels last seen during the GFC, adding pressure on banks' income side. Smaller banks are likely to suffer as confidence will remain stronger at bigger banks. If you found the forum useful but have follow-up questions, please feel free to continue the conversation at Smartkarma. We hope to speak to you next week. And until then, all the best and goodbye. That's it for this week. You can find more ideas like the ones we discussed today on demand on our YouTube channel. Remember to subscribe and hit the notification button so you'll never miss out on another episode. If you liked these ideas, spread the word. Tell a fellow investor about Smartkarma Plus and follow us on social media. Just search for Smartkarma. And of course, don't forget to visit smartkarma.com for more independent, differentiated investment insights. Thank you for watching and see you next week.